I think we've seen regulation combined with digitisation as the two main drivers on the pressure that's been put on the finance industry today.
Hello, and welcome to the Bankers Masterclass series in association with Saxo Payments, looking at how banks can drive forward innovation in financial services through utility banking. I'm Joy Macknight, Deputy Editor of The Banker, and I'm joined by Anders Cour, co-founder and CEO of Saxo Payments. In Chapter 1 of this 4-part video series, we'll look at how banks can accelerate their digital transformation and take advantage of the move to open banking by adopting a network-based approach to financial services. Anders, thanks so much for joining us today.
Thank you very much.
Can you tell me a little bit about what real pressures are coming to bear on the financial services industry today?
I think we've seen regulation combined with digitisation as the two main drivers on the pressure that's been put on the finance industry today. And that then takes us to, let's say, the derived effect of that, because that has been the evolution of the fintech industry, which is putting pressure on the banks. In addition to that, the evolution of the tech business, especially the platforms, the big platforms that can also enter the industry. And in addition to that, you see the regulatory side of it also evolving both from compliance and from ring fencing and a lot of different angles that are putting pressure on the banks. I think that leads to the fact that if you look at the vertical integration that banks have been for many, many years, literally handling both the core banking side of the value chain and only the client relationship, I think we'll see a vertical separation over the next decade, where many banks will have to decide where to place themselves in the value chain. Exactly like we've seen with some of the creation of the other utilities, especially in the energy sector in the 70s and the 80s. And I think that will all end out benefiting the consumer and the corporates with better competition.
And there's this big move towards open banking and open application programming interfaces. How is that really going to have an effect on the banks?
I think it's actually back to the deregulation that in Europe started with the payment service directives, and in the US the equivalent MSB legislation that allowed non-banks to compete with banks on certain services. And I think if you look into the open banking framework, which we all expect will be here at some point, hopefully we'll see a much more agile and competitive landscape than we saw 10 years ago, because we'd give the ability to a lot of various businesses to extract data and other relevant services from each other, and then literally pool this data towards the consumers in a way that can be useful for the said businesses, and eventually it should benefit the consumers.
But obviously there's opening up, there's greater competition, which could be maybe a threat to banks in some ways. How can they future-proof their business?
I think on the banking side, if you look at the Netflix moment in banking, I don't expect to see that as powerful as we've seen in other industries, because I actually think the banking industry is quite good in staying very close to the development and trying to be agile in the areas of the value chain where they need to be it. And in my opinion, they will keep focusing or increase the focusing on the user experience, the new agile products, while focusing less on the IT legacy and, let's say, the core banking infrastructure that they also have.
So I know Saxo Payments is really sort of pushing forward this idea of a network-based approach to banking. You know, how will that really drive the digital and business transformation that banks need to do today?
I think what we have done by introducing the banking circle at Saxo Payments is to create a network where any bank will benefit from being a member by getting access to clearings in various countries without using a correspondent banking network. And we've started up by doing this on the payment side so that any bank can become a member and literally let us handle the non-core payments, which is typically the payments they have that are not in the domestic area, while then literally getting flow back from other banks in their domestic region where they actually have an edge. And in that respect, getting rid of the operational hassle that is associated with running through a large correspondent bank network, which they might or might not even have access to. In that respect, I think it won't only benefit on the transaction side, but also in the fact that they can use these resources everywhere else in the organization, and especially on the innovative side, open banking or whatever you call it.
Excellent. Thank you so much for your insights, Anders. In Chapter 2, we will be discussing how cross-border payments can become much more efficient.